the first top of just before 69K marked the bottom of this move. Okay.
Right.
That's the market maker's move. Wham. It goes up 45%. Now we're at the retailers. Now we're at the retailers breaking point, right? So it's about being on the right side of the psychology of this trade, which is why you and I made money in this 45% move.
I learned something today.
Right?
Bigs and Bogs.
We're just going to wing it. We have nothing to talk about but the market scope. We don't have any topics, okay?
We have no topics today. No topics
Just going to wing it.
Oh, hey guys, welcome back to your feature here on Bigs and Bogs. I'm Marty Boggs.
And I'm Julian Miggs.
And we got Spencer on Talent Screens. Thanks for joining us today, folks. We like to come at you about once a week or so and talk about some subjects that we believe will benefit your future hands. So let's get right into it. What are we up to today, and how can we plan for tomorrow, Julian?
Thanks, Marty. Not a whole lot going on. Nothing has really changed since last week. Price action is really good. We're going to talk about a couple things regarding New York and possible payments in Bitcoin for your bills. But first, always with the market scope first. Let's just get into it. Market scope.
Market scope.
The candles are where the action is today, so let's have it. So we're going to start adding this coin market cap. So now that we are starting to see some more volatility in price, we're not just headed down. We had a big month for January. Bitcoin is up 45%. We're going to start going over this coin market cap and showing you exactly where the crypto market is, the volume that's inside of the crypto market, some things that are trending maybe in the scene, and see what's going on. Because as
there's more volume in the space, more things are happening.
More things in the space. So,
just throwing this out there, a couple weeks ago we did show you this, and we were down around 300 billion for market cap.
Yeah. So the market cap.
Now we're at a
like
trillion.
Marty said,
Now we're at a trillion.
it was at $300 billion. Now the market cap is at over $1 trillion. This is insane. The 24-hour volume, $47 billion. This is good to see. BTC dominance, so dominance over the rest of the crypto space, 41.6%. This is good. The market is looking good. Things are looking good. They are on the way up. 22,438 cryptos. Fuck me. They just keep coming.
Yeah, well, they're trying to copy the best. Trying to
537 exchanges.
Trying to copy the king, man.
Okay, so let's get over to the BTC USD chart and see what's going on.
Speaking of the king.
So here's Bitcoin versus US dollar chart on the... I meant to start on the daily, but we're actually looking at the 4-hour time frame, and that's fine. We can look at the 4 hour. So this golden bar that we can see up here, this is, in my opinion, the ultimate high. So this is the last kind of resistance that we faced in 2022. And we've already exceeded this resistance here and the FTX collapse that was down here at this yellow circle. So the target right now is 25K. So 24.6 to 25K is what we're hoping to see.
But looks like it's going to go down, Julian.
It does. So we'll get zoomed in here and see what's going on. I'm just going to keep it on the 4 hour, actually. We usually like to show you the daily, but we're going to look at the 4 hour here. So I've had these trends. So these two orange lines that come on the outside of this go down to the bottom that we had there at the end of December and beginning of January before this move started up. So you can see as soon as we confirmed a break below this orange line, we had the break below and then the retest and confirmation. Wham, this thing went straight down to the bottom of this resistance range. So we're now at the bottom of this, and this is 22,750. This would have been the last daily low, and we've now taken out some stop losses here. So this is looking to me like a bear trap.
Well, we got straight, let's just start by saying we got straight faked out last week. We were breaking out. Last week we were breaking out, and we just got slammed.
Yeah.
Slammed. But for a good reason, because we're over leveraged, right? That much more volume coming into the market.
Yeah,
market makers are looking
and people
to take
get
some
excited.
profits.
Like, that's what I keep trying to tell people. They're never going to just make it that easy for people to get rich. Like, they're always going to slam you.
And we were talking about this the week before that with 19K. Like, yeah, we're running up. We've obviously gone sideways for 2 weeks now, right?
You know, and I fail on updates. Like, honestly, like I get so involved in the charts and trading during the week that when I try to film stuff, it just doesn't work out. So anyway, I had these lines marked.
That's selfish.
Yeah, it is selfish. It is selfish. So just focus on
prick.
trading. But I put these were actually Marty's trend lines here.
I want to copy your trade, bro. Come on.
And I added these in because I did feel that when we broke this orange line that we are kind of shifting directions here. So we can see I added these other trend lines
they
in.
call it a break of market structure.
A break of market structure. And this down here, I put this yellow circle here before we entered this range, but this is going to be the point of interest. So now the point of interest is 22,750, and I believe that we're we're just going to bang out some stop losses along this line at 22,750.
That's what we want to see if we're going to go back up.
If we're going to go back up, unless this is just a reversal.
We got to hold this area.
But
that's what you just said. So you were getting to, I cut you off there, you were getting to bear trap.
Yeah. So bear trap, this could be a bear trap. And to me, the tipping point is going to be this access point. So this red line was the all-time high from 69K. And we can see we confirmed that break above before we made the move to 24.2. So the access point to this move is $22,500 approximately. My line is at 22,495.
Yeah. And still sitting at a higher low.
So... And it's still at a higher low, technically. But if we go to the daily, let's just go to the daily. 4 hours where I trade because you can just get some nice trades on the 4 hour. But let's go to the daily. So that was the low for the daily too. As you can see here, the axis point here was the confirmation of the break above that resistance line from 69K, gave us the push to 24.2.
Right.
But this, in my opinion, so everyone's like, at 18K, they were like, oh, this is the bull trap. 20K, they were like, oh, this is the bull trap. The goalpost just keeps fucking moving.
Pretty much, yeah.
As all the bears get wrecked.
Yeah.
Right? And now,
short squeeze.
Now we're at this actual point where, is this the bull trap? Because this is the line from the 69K high. Okay. But we also have the trend from bottom that this finally broke. So this is, in my opinion, this limbo area between the real bull trap or a bear trap, and we continue moving on. So what happened in 2022? With interest rates and things like that bringing us to where we are now. They had 7 rate increases in 2022.
And we've seen evidence of rounding off, lowering, smoothing out.
Right. So now when we thought there was more pain and recession coming because we haven't technically hit the targets to correct inflation, everyone thought it was going to go down further. What do? They pump the markets way back up. Yeah. We're up 45%. So now everyone's hyped going, oh, market's going to keep going. We got no reason to slow down because inflation, we've kind of corrected some of this issue. But generally, what we want to see is the same amount of increase as there was inflation.
That's supposed to be the rule, but Taylor's Law. But the number they gave us were wrong. Like, we know that everything they were saying is wrong.
But we have to go by what they show us, though, because that's all we have.
That's like, right? I guess so. But
if they're at
macro speaking, all that shit's out the door.
If they're at 4.5%,
we know that they're just trying to prolong Bitcoin's overtaking.
Yes,
we know that's what it's all about.
If they were at 4.5% and inflation was 6.5%, then there should be more increases coming.
I think they said what? So what are we at right now? 4.75. Is that where we're at? 5?
They just did a 25 basis points increase, so we're going to be at 4.75.
Right. So, and then they were talking about getting to 5. That's what they were trying to get to. And then they said year over year was 7.
So,
but they wanted to keep it around 2. So getting to 5 is okay for them because then that gives them their yearly average of 2 still, right?
So this is why I still think that this thing can go up here and touch 25. Because they're going to want people to think that this thing is running up now.
Well, we're hearing recession in the mainstream media. Right?
Everyone missed the move. The 45% move that just happened. But they're going to want to hype people in. Well,
IDCA.
Most people miss the move, but now they're going to FOMO in. Right?
Exactly.
So I can see them taking out some of these stocks.
Well, isn't that what the last leg up was, though, arguably? Because we had the massive leg up in the first few days, and then we consolidated for about a week, and then we had another move up. So it could be whale, and then retail, and now we're just hovering in no man's land, trying to figure out where we're going to go from here. So I do agree that we're going to hit at 25. But it might be, be a bit before we go back to 19K. You heard it here.
I've always said that I like to have the lines from the first top and from the first bottom. And the reason being is because I believe that the first indication is the market maker's initiation to whatever the move is that's going to happen, right? So the first top of just before 69K marked the bottom of this move, okay?
Right.
That's the market maker's move. Wham, it goes up 45%. Now we're at the retailers. Now we're at the retailers breaking point, right? So it's about being on the right side of the psychology of this trade, which is why you and I made money in this 45% move.
I learned something today.
Right? So now we're at the retailers breaking point, and they're still going to be psychologically convinced that this is a breaking point, right? So we go up to 25K. Now, this is just a potential scenario. This could honestly be the breakdown, and we just break down right here. But what I see happening is them knocking out the stops. We're at the daily low of this 22,750
Right.
before letting this spike one more time to either somewhere between 24K and 25K, potentially doing one more spike here before we go into more bearish price action for the next couple of months, right?
That makes a lot of sense to me.
And that's the reason I indicate the first tops and the first bottoms. Okay. So when we have pivot points, we always have a double top or a double bottom. See, we already had the double top, but to indicate a bearish double top, what we want to see is a higher high, right? Okay, so yes, this wick gave us a higher high, but to me, this was just exposing all the liquidity that they need.
Yeah, searching for
candle
stop losses.
bodies were actually lower.
Yeah.
Right? So, like I said, I could be totally wrong here.
And the longer this plays out, the lower the price will be for the retest.
Right. And so essentially, this area right here, all these wicks in this low area down to 22.5, in my opinion, this is the area of demand. Okay. So this is where aggressive traders and smart money will build their trade. If this is correct, this scenario, it obviously could go down. Don't hold on to this. Like if you're taking all your financial advice from me, then I don't know what to tell you.
Just subscribe.
That's
all you need to do.
But I mean, we've been killing it here, so But anyway, so what I'm saying here is that this red box essentially is going to indicate the fair value range of this price action right now based on what's going on in economics. This is the fair value range.
So the old-fashioned buy low, sell high.
Yeah.
There's your low, there's your high.
So aggressive traders are going to get in here. They're going to have a stop loss somewhere just below this access point of 22.5. And aggressive traders are going to hope that this thing goes for the 25K target before we actually see the cool off of this run, right? So this is why I think it's a bear trap. We broke the trend, the orange line that we have from the first bottom. We broke that. We can see this candle put out massive volume to take us back to the point of interest, which is where aggressive traders build their trades. So I could be wrong, but this is potentially where I'm building along.
Yeah.
But I also took a short at this breaking point. So I, for the first time, actually hedged a bet, and I'm in nice profits on the short. I actually took some profits here, added to the long, in case it goes back up. Vice versa with the short. Let's try to get on the right side of the psychology. This is my point with the moves here. We want to be seeing what the initiation is, not what the retailers do with the price, right? Because the big money, the smart money, they don't give a fuck what the price is. They care where you put your liquidity. And they do that by initiating moves, right? So,
so we hope to build a shelf there to see higher prices. If we don't build the shelf there, we're going down.
Yeah.
Even though once we build that shelf and go up, if we do see that, expect to put in basically so add to the bearish divergence that we were already
seeing. And even actually, like, if I go to the daily, because I had that on the 4 hour. So if we go to the daily, this whole area should be considered fair value. Full candle bodies here, right? Should be considered fair value. So as long as it wasn't actually a turning point and a dump here, then we should see this come back to the top of the price range here. So that's what I'm looking for this week. I'm looking for this to come back to at least to 23.4 over the next day or so.
Good time to DCA.
Always a good time to DCA, but if we get that break below 22.5, then I do think it's cool off time, and
which is actually preferably what I'd like to see.
Yeah, because we want to be able to DCA for the next few months until this thing really does find a bottom. Because I think February 14th or 13th or 14th is the next FOMC meeting. That's when we'll get CPI numbers for January.
Day.
We'll get CPI numbers for January and the forecast for the rest of the year on what we should see for increase rates, whether the next one's going to be 0.25 or 0.5. So if Europe goes with 0.5, we might follow suit, take 0.5. And if that happens, we're definitely going bearish. Now, this is the other thing that I wanted to bring up on the weekly, because I don't think that anybody else would have seen this. But the weekly looked good, but weekly is also obviously coming to this resistance point. And we can see that we have the double top there. But if we want to look at that as
that does look like a reversal.
Well, it looks like a reversal, but it also looks like a confirmation of the resistance line from 69K.
Right, fair enough.
Right? So if next week goes green, then this is a confirmation of the breaking point of 69K.
Yeah.
So this is why there's conflicting opinions here, in my opinion, because this could be the fake out and just go back down. But what I want to show...
Which they love to do. They love to do that.
They do. So what I want to show here now is that we have a shoulder and we have a double bottom, which is beautiful to see, head, right? and now shoulder all the way to there, and then very well potentially a right shoulder here, which could take a couple of months to play out, but it makes sense before the bull trend goes into the next halving, too, right? So this is why I'm saying I really do feel that there's a potential touch of this 25K range before forming a right shoulder in here. But I mean, this thing is so volatile. All the time.
We're going to be in that range.
You can never be like, I'm never going to be bang on, but for the last 6 months to a year, because it's just been a bear market, like we've been pretty fucking bang on with our calls here.
You're going to have to subscribe to find out.
Including the dollar bottom, literally to 15.4. Like we called the bottom here in that range. So, and I don't know of anybody else on YouTube that did.
Everybody claims they have. But
now that the bottom's in, they go, bottom's in,
Hindsight's
bottom's
2020.
in. But
We're just here pushing DCA and just showing our opinions, right, and seeing what we see.
But I'm sharing my opinions and showing what I see, but I want to also just note that we're feeling more confident in our analysis because our calls have been right. You know what I mean? So it's not trying to boast and say we're better than anybody.
That's exactly why we started the YouTube channel, so that we could document our findings, and then we can look back and prove and see, were we right? Well, here's the evidence. We can go back and check what did we say last week, right?
Yeah. So
we're not right 100% of the time, but more often than not we have been. And some of the calls that we've made have actually taken in a few weeks to play out. So maybe it doesn't play out that week.
So that's one thing that I'm noticing is that. So I trade with another guy, like we trade together every day, basically just kind of in chats or whatever. But my calls have been on, but they're like 24 hours before they happen. I'm like, oh, today's close, we're going to be at 23.7.
Yeah.
And then it was actually the following day that we closed at 23.720 or something like that. So I'm like, okay, my calls are good, but my timing isn't quite there.
Yeah, you just got to be patient. Working on the patience is key.
Patience is so key. This is why, I personally scalp the 15-minute chart. Like I've just fallen in love with the 15-minute chart lately, but honestly, 4-hour chart, anything less than the 4-hour is not a strong confirmation. Daily, preferably. Weekly, we can see the double bottom played
your
out
direction,
there, right? So,
good stuff today on Biggs and Bogs.
Good stuff today.
Make sure you like, subscribe, comment, let us know what you're up to.
Please do subscribe. If you're getting value in the content, do the frickin' things. Let's get it out there. Let's make some money.
Let's go, baby. Bitcoin's king, right? Biggs and Bogs out. Peace.
Biggs and Bogs.
Didn't look at the US dollar.
I bought a Bitcoin.
And
I liked it.